obviously this is landlords are in, I think, because of the world we're in and this whole structure question.
Yep.
For some landlords, sale will become the logical answer.
Yeah.
For some, certainly our backlet advisory business that works through an auction company, we're doing a lot of landlord to landlord transactions with our auction partners. So there are a lot of landlords who have said, for whatever reason, whether it's retirement, they've just had enough, the tax has pushed them out. You know, there's all these triggers for whom now sale has just potentially become the right route, shall we say.
Yep.
But not a lot of people quite understand how CGT works or how it will be calculated. So it would be interesting just to sort of briefly cover that, you know, for...
Absolutely. In its most simple terms, the sale price of the property less the cost price of the property is a gain that you've made, and you pay tax on the gain. The level of mortgage you have on the property is completely irrelevant. You can get deductions for selling costs, so your estate agent's fees, your solicitor's fees. You can get deduction for buying costs, such as your solicitor's fees when you bought it. You can also, I talked before about the difference between capital and revenue. So if you spend any capital on the business, you can potentially get this deduction from that at that point in time. But ultimately, it's the difference between the selling price and the purchase price of the property. Once that's been established, we work out capital gains. Capital gains is paid at either 18% or 24%, depending on whether you're a basic rate taxpayer or a higher rate taxpayer. I will say watch this space from a budget point of view, because I think that might be attacked in October. We just don't know. But at the minute, it's 18% or 24%.
Do you think that would be its notice? Would that be an immediate rise, or would it be a future date?
It could be an immediate rise. It's been done before.
Okay.
It has been done before. Because one of the problems with property sales particularly is, and you'll have seen this following lockdown where they did the stamp duty, where they dropped the stamp duty down through lockdown. There was a stampede of transactions trying to get done before it went back up again, and it put a huge amount of pressure on land registry, which I still don't think they've recovered from. And so they tend to not want to do stuff like this with 3 months' notice or 6 months' notice, because there will then be a stampede of people trying to sell in that time frame, putting extra pressure on the solicitors and the land registry to try and get these things done. So often with things like this, they can do them almost with immediate effect. Not always, but it could be immediately, because capital gains tax, whilst it's a tax in that tax year on those rates for that tax year, it is still it's an individual transactional date. So they can assess, well, it was last Tuesday or it was next Wednesday. They know exactly the date that the deal went through, and the rate can apply on that date. And it doesn't matter what point in the tax year it is, it's that percentage. You do get an annual exemption for capital gains tax. This was £12,000 per person per year. It reduced to £6,000 per person per year. It's now £3,000 per person per year. That could be where we get hit again. I don't know, come October, but it's down to a quarter of what it was. So if a property is jointly owned, you obviously get 2 lots of that allowance. If there's 2 people who own the property, if there's 4 people who own the lottery, you get 4 times. Now, when it's 12,000, we did have situations where clients who maybe owned the property individually, before they sold it, transferred it into joint names so that they got 2 lots of it. It's probably not worth it when you're getting only a £3,000 annual exemption, because of the fees to get it transferred into joint names first and the hassle that you have with that. But it can happen. So, but ultimately, it's the sale price less the purchase price, allowing for some costs that you've got, multiplied by the percentage that HMRC have 18 or 24%.
And it's interesting you mentioned mortgage, because you're right. People will say, "But I have a mortgage," and that is irrelevant, isn't it? Mortgage.
The number of times somebody come to me and said, "I'm selling a house for £100,000. What did you buy for? What did you pay for it? I bought it for 60. Okay, so we've got a gain of 40-ish, give or take some costs. But my mortgage is 80. I don't care. It doesn't matter what your mortgage is. Well, I'm only going to get 20,000. So how can I have a gain of 40,000 when I'm only going to be left with 20,000? Well, I don't know how you've got an £80,000 mortgage. Well, I remortgaged it, didn't I? Well, what did you remortgage it for? I want to put a deposit down on another house. Well, that's got nothing to do with this house, then, has it? You sold it for 100,000. You bought it for 60,000. Your gain is worked out on that. The mortgage is irrelevant.
Yeah, no, fair enough. That will be useful, I think.
We say it a lot, especially if a property value's gone up. People will remortgage to release equity out of it, so they can go and buy another property. It happens all the time where the mortgage value is more than the original purchase price.
Yeah.
So, forget mortgage values. It's sale price less cost price.
Yeah, no, that's right.
The only proviso I'll add on to that is if somebody here has had a property since before March 1982, there are some special rules from 1982 values. Obviously, you've had the property a lot of years, but we've got a client that we're dealing with at the moment who's had a property since the 60s. Some special rules for it's called we have to do a March 1982 valuation. But the thing is that the property that's selling I think it's selling for £600,000 or £700,000, and it cost £20,000 in the 1960s. But we get to do a rebase to a March 1982 valuation, which I can't remember the figure off the top. It might have been £100,000 in March 1982. So it's sale price less the March 1982 valuation rather than the original cost. So there are some odd quirks in there that you need to be careful of, but that's one of the main ones.
Fair enough. No, I think that generic calculation will be helpful to people because they do get distracted by mortgage balance, frankly. No, that's useful. Now, I know we've gone